Hi guys, Habib Mahmoud. Today we're going to talk about the dollar collapse and the effect or implications of the dollar collapse around the world, and what are the structural change that can happen once the dollar collapse. And at the same time, we're going to talk about the current situation of the dollars right now, what's happening to the dollars right now, and how long it might take for the dollar to collapse, and what are the implications. We're going to talk about that. So let's start the video. Alright guys, now we're going to talk about what is happening with the US dollar and current situation of the dollars, what's happening to dollars. So here you can see this news is a very important news. This news is the reason people start to question US dollar. They're saying that whether this is the time the US dollar is going to collapse, okay, and is this the end of the dollar rule. So what's the news is this about? What's this news is about? So here you can see Saudi Arabia, they're ending the 50 years of petrodollar deal with the US. Okay, now if you don't understand what this petrodollar means, I made a previous video about the rise of the US dollar and how US dollar become the superior currencies in the world. So if you haven't checked that video out, you can check the video out in the link in the descriptions. But right now you can understand that I'm going to explain in simple reason. Whenever Saudi Arabia they sell petrol, they sell in US dollar. That's the deal. Okay, so around the world, whoever wants to buy petrol from Saudi Arabia, crude oil, they can only buy through dollars. Okay, this is the reason there's a demand for the dollars. Okay, for this 50 years, those countries are dependent on crude oil. They need to keep like a reserve of dollars so that they can buy petrol or crude oil from Saudi Arabia. And Saudi Arabia is the biggest producer of the crude oil, so that's the reason. So but right now they Saudi Arabia announced that they end 50 years of petrol dollar deals with the US. So this is a major news that's happened in the US recently. And the next news is about the Russia, because of the US sanctions in the Russia, they end the dollar and the euro trading in Russian main exchange. So in the Russian main exchange, stock exchange, they are not gonna trade. You cannot trade with dollars or euro currencies in the Russian stock exchange. So de-dollarization of the Russian, they are trying to avoid dollars in their economy. And here the next is a very interesting data that I found out, and I really want to share this data from to you all guys. This data is about the China is moving away from the dollar. Okay, so the data is very interesting. If you see here in March 2010, the Chinese settlement, which is a trade settlement, like the majority of the trade happens in dollar. So if you see here the data in 2010, the majority of the Chinese trade used to happen in US dollar, which is around 84%. Okay, and 0.3% are happening in the Chinese currencies. Okay, it was in 2010. Okay, but if you check right now, right, slowly if you go to the year like 2011, 12, 13, you can see it's gradually decreasing. Okay, from 84 it went to 72 in 2013. Okay, and in 2020 it went to 54 from 84. Okay, and now in 2024, okay, it went to 42%. Okay, and Chinese currencies trading from 0.2 it went to 52. What does this mean? China slowly they're gradually reducing the dependence on dollar. Their trade that used to happen in majority of the time in dollar, they're reducing the dollar and they're doing trade in Chinese currencies. Okay, so here you can see in 2014 only 42% of the trade the Chinese does in US dollar, and 52% are they doing in Chinese currencies. So this is a major change. Okay, because Chinese is the major manufacturer of the world, and many countries are heavily dependent on China, and China is the one producing for the world, and there's a lot of countries they buy from China, do trade from China. But China used to trade, okay, buy the goods or sell the goods with the dollar, but now they're avoiding dollars and they're shifting to their own currencies. They're telling to their buyers that if they need anything from China, they have to buy it with Chinese currencies rather than dollar. They used to have around 84% of the trade in dollar in 2010. Now in 2024 it gradually decreased to 50%, decreased, it went to 42%. and Chinese currencies trade in Chinese currency is increasing in China. So that's a major drawback for dollar right now. So here in this video we're going to talk about will the dollar collapse and what will be the structural change if the dollar collapse and the impact of the dollar collapse in the US stock market. Okay, so let's get started. First of all, now the question is, will the dollar collapse? You guys need to understand one thing, that US is not an apex economy anymore. Okay, there is a lot of countries come up that can challenge the US. China, Russia, India, Saudi Arabia. These countries are right now, they are also growing countries, also growth countries. They also have that power that US have right now. Okay, and here US on the downward sloping path. More players are now like China, India, Russia, and Saudi Arabia coming. Before, after the World War II, America is the only country that was very important for the world. But right now, that's not the case. Right now, not only America, even China is important for the world. India is important for the world. Russia is important, and of course, Saudi Arabia is also important because of their crude oil power and because of the OPEC. So you need to clearly keep in this mind that US is not an apex economy anymore. They are not the greatest economy, greatest country around the world right now. There's a lot of other players that you have to accept that. And the next here is that the implications around the dollars right now around the US. First of all, if you see here, US dollar has an economy is weakening. US economy is weakening. I'll show you the data how it's happening. This is a very interesting data. During the World War II, if you see here World War II, the US debt to GDP, it was around 120%. Okay, and which is a very huge. Okay, it means like if the economy of the US is around, let's say for example hypothetically a million dollar of economy, but their debt is around 1.2 million. So that's a huge debt during the World War II. After the World War II, the debt of the US government has gradually decreased. But after the Bretton Woods agreement, cancellation of the Bretton Woods, if you don't know what's Bretton Woods, I have explained that on my previous video. You understand that the Bretton Woods is exactly, it's basically means that they remove the golden standard from the dollars. So once they remove the golden standard from the dollars, they can print a lot of money or they can take a lot of debts. That's the time this in 1971, if you see here, in 1971 the debt of the US dollar has increased, and now interestingly it came to almost to the same path of the World War II. Okay, and right now the US debt to GDP ratio is around 121%. It's the same level of the World War II. So like US is having a lot of debt in their balance sheets right now, this is the reason the US economy is weakening. Okay, and the next here is that dollar is also weakening. Not only the economy, dollar itself is weakening. Here you can see the data here. Right now, if you see the chart price of the dollar, it's basically dollar index. It compares the dollar value with a basket of currencies, and if you see it, dollar is gradually decreasing. It's decreasing the downward path. It went up for a while, now down. Okay, it went up for a while, now it's down. Now it's down here. So even the dollar itself is weakening. You can see that weakness in the price itself. Now, the lot of bad news regarding dollars. Now you guys are like convinced that dollar is going to collapse very soon, but it's not the case, guys. Dollar is not weak, not so weak as of now. Okay, so the reason here you can see I have shared this data in my previous video. Here you can see that the global foreign exchange reserve, the reserve of the currencies is still around 59%. The dollar reserve is still 59% is there, and even the lot of export is happening from different countries, they does in dollar. Okay, and also the exchange rate transaction is happening in dollar. So dollar is still hold that reserve value still. So but every country is trying to build an ecosystem. Before like 2 to 3 decades, US has an ecosystem which is called a monetary system, which all the country follows. All the country hold dollars in the reserve, and this is the only ecosystems available back then. Okay, when the countries are dependent on a dollar, but right now many countries, they're building their own ecosystem in order to be competitive with US dollars. Like example, China, they started their system, or they call it RMB system, basically trading in Chinese currencies. They started this one system. As I shown in my previous data, it says China used to be trading in dollar 84%, but now it's gradually decreased. Now 52% of the Chinese trade is happening through this system, which is Chinese currencies. The next is the Russian. Russian is heavily buying a lot of golds. Okay, they're buying a lot of gold, so they want their system ecosystem to be around the gold. If you want to buy from Russia, you give them gold and you take the goods. That's how creating an ecosystem. China has created the currency ecosystem, and Russia is creating a gold ecosystem. And here El Salvador, they went to the ecosystem. It's different ecosystems called Bitcoin. They have accepted Bitcoin as their legal tender in El Salvador. If you go to El Salvador, you want to buy anything, you can buy it through Bitcoin. So they also created their own ecosystem. Also, another ecosystem is coming that people are saying that is going to be a major competitors for the dollar. It can be, it's called BRICS currencies. Okay, so big currencies next is big things coming up, and it's a mix of different countries like Brazil, South Africa, China, Russia. Together they're bringing their own currencies in order to compete with the US dollar. So here, now we're going to talk about that. So basically, whatever I have said previously, US dollar is still a reserve, is hold the power of reserve currencies, but you need to understand that it's not the same the power that used to have. It's gradually is weakening. Okay, and we can see the weakness in dollar price, in the economy of the US itself. So we can see it's weakening, and the trust and competitiveness of the US dollars is increasing a lot. Okay, so there's a lot of competition in the dollars, a lot of things happening. So you can see things are gradually going down, and there is different things that are happening, right? So we're going to talk about that. What will be the structural change if the US dollar collapse? First of all, here, as I said, that US versus the basket of currencies. If US dollar collapse, I'm sure different countries, they will avoid holding US reserve. US dollar has reserve currencies. So I'm sure, like many of the economists, they're saying that there's a times coming up where US dollars is won't be the only reserve currencies. There will be other reserve currencies also. Maybe 2-3 reserve currencies will be there. Even I have seen a previous news about the chairman of the Federal Reserve of the US. He said that it's possible that we can have 2 reserve currencies. So this was what will happen. US dollar collapse, people will hold less US dollars, and they might hold other basket of currencies like BRICS and or any other currencies that might come up, that might be a good competitors for the dollars. And here the next is that once the dollar collapse, world will trade less. The trading around the world will be very less. One thing I would like to share with you guys, that whatever the growth that you have seen after 2008, okay, it is not something like economies become very productive. Okay, the trade is increasing, economy is growing, not because the economy is productive, something very innovative has happened. Is all because of the debt that US hold. Is because the US printing a lot of money. This printing of money created a lot of boom, like growth in around the world. Okay, once the dollar collapse, US won't able to print money. That's the reason that the trade around the world will be go down. I'm explaining that here in this data. This is the central bank assets. This means the debt that the money that they print. This is the debt basically. If you see here, Japan, they have a lot of debts. Even US, they have a lot of debts. These are the basically the money they printed to inject in the economy. Okay, if there's a lot of money printed and injected in the economy, assets price goes up. Okay, economy is going booming, and GDPs are booming. Everything is like happy everywhere. So because of the debts, money being injected in the economy, if US dollar collapse, US won't be able to do that. If they don't do it, what happens? Trade around the world is gradually go down, it will decrease. That stimulations or injection of the money is no more going to happen. And here you can see that in the last 14 15 years, US dollar added around 23 trillion dollar in the economy. It's like us have taken $23 trillion in debt, and they inject it to the economy. Once they inject to the economy, it traveled around the world, and you can see growth in every countries. That's the reason if the dollar collapse, US won't be able to do these things, and that's the reason there might not might just for sure the trade around the world will be gradually go down and slow down in currency manipulations. Like US does a lot of manipulation in the dollars. Once the inflation goes up, they increase the interest rate in order to decrease the inflations. And they, like many countries around the world, they manipulate the currencies in order to make it weakening. China, like example of China, they weak their currencies purposefully on purpose, so that their export become more competitive around the world. So this currency manipulation will go down once the US dollar collapse. On the next point here, the period of slow growth. As I said, what's the period of slow growth means? As I said that the growth after the 2008 crisis, whatever the growth you have seen is all because of the US dollar printing of money. Once the dollar collapse, this printing of money will stop. This once this stop, the growth in economy around the world will be gradually slow down, because and there won't be a much growth that we are seeing right now. If you see, whenever there's a crisis, like example the recent crisis we have seen in 2020 pandemic, stock market crash, economic crash, everything is crash, but suddenly there is a v-shaped recovery happens. Even if you see the stock exchange, you will see a v-shaped recovery. Okay, the price went down and suddenly it went up. Why did it went up? Because of US interfered. They printed around $4 trillion and they injected to the economy. Because of this injection of money, a lot of money comes in circulations. The price of the asset goes up, economy start to revive. Okay, so this is the reason when the lot of cash injected, growth start to become up, growth starts to go up. So now if the dollar collapse, US won't be able to do that. That's the reason the growth will go down. They won't be able to print. If there's a crisis comes up, US cannot print a lot of money in order to protect the economy. So that's the reason there's a period of a period of slow growth would happen. Here you can see here, now this is the S&P 500. You can see there's a lot of up. Mostly they went up. This up price, you might think that what happens, how did the stock market goes up? There might be a lot of good growth happening. Yeah, no doubt growth is happening in everything. But the what backing the growth? Is it the productivity of the economy, or is it the debt that the US does? Majority of the growth is because of the debt that have around the world. All right, here you can see, whenever you can see the P/E ratios, I hope you know the P/E ratio is basically how much times the investors willing to pay, how much time the earnings the investors willing to pay for a particular companies. So if there's a lot of debts, a lot of money printing happening, this P/E ratios itself increase. Okay, it goes to 100 times, 200 times, 50 times, 60 times, because there's a lot of debts in the economy. Okay, a lot of money comes up, the value of the dollars goes down. Okay, and the asset price goes up. So no matter if the earnings of the company is increasing or not, if the US keep on printing the money, definitely the P ratios goes up. Okay, so this growth that you have seen, massive growth, this all majority of the reason because of the debt. If the dollar collapse and US are won't be able to what you call print money, you might see growth in the stock market if the economy is actually growing, productivity is actually happening, or companies are making enough money. Okay, if they're making profits, then definitely stock market will go up. But majority of the stock market goes up because of the debt or injection of the money this done by the US. That's the reason, not by the US itself, many countries does that. So here next is the massive increase in taxations, the next point. Now the thing is that any countries, if they want to survive, if they want to grow, what they do is that they take debt and they start to grow their economy. But what happened that if the US dollar collapse in America, the things that America won't have that source of what you call money that they used to have, the printing money. So what they will do, in order to survive the country, in order to run the country, they will increase the taxes, they will increase the revenue of the government. And you can see there will be a limited option to buy real assets. What's that's exactly means that as I said, the stock market growth majority happened not because of the productivity, because of the debt or the money printing that have been happening in the US economy. But because of that, the all this like asset like real estate's price goes up, the stock market price goes up, Bitcoin goes up. If the US print money, the asset that the effect of that you can see is in the stock market and the Bitcoin. This is the because this is the highly liquid assets. So if the US print money, Bitcoin goes up immediately, stock market goes up immediately because of the printing of the money, the value of the dollar and increasing the value of the assets. This is a phenomena. I'm going to explain that later. So if US are not able to do the what you call the printing of money, you will see there will be a less growth in all the asset classes, in real estate, in Bitcoin, in stock market. Okay, so it will be see a less growth if the dollar has collapsed. So you will find very limited option to buy asset. You cannot see the same return that we have seen in the last 40 to 30 decades. You won't see that because okay, so that situation can be happen too here. So now we're going to talk about the implications of the US dollar collapse on the US stock market. What will happen if the dollar collapse in the US stock market? Okay, first of all, exporter in the US economy, in the US country, what are the companies in this US who dependent on export, they will benefit from the weak currencies. Okay, if currencies of the dollar weak, the exporter, it will be easy for them, for the importer from the US, other countries who buy from the US, it will be good for them, it will be cheaper for them to buy from the US. So in short term, this will be for short term export companies in the US will benefit, but not for a long term. Next thing is the importer. If domestic companies in US who are dependent on importing from outside, okay, if the currencies of dollar devalue, it will be expensive for them to import, and if they does that, their profit margin will squeeze, right, squeeze. And because of the dollar weakening, and it can also impact the inflation of the country. So they might import inflation in their country, because for importers, if the dollar is weakening, if they import anything, it will be expensive for them to import, and if they import expensive things, definitely it will naturally create inflation in the economy. Okay, and also if dollar collapse to reduce the investment confidence in the US market, they might not be the same. Like you can see right now, Nvidia is going up, becoming the like third highest company around the world, fourth highest company around the world. Apple is the biggest company around the world right now in terms of market cap. Why? All over around the world, they're investing in the US market. Okay, US dollar is still the reserve currency. It has still hold the power of the reserve currencies. That's the reason a lot of confidence in the economy. If the dollar collapse, this confidence will vanish, and this will create less liquidity in US stock market, and also a slow growth in the US economy and companies. This of course, as I explained that earlier, if the dollars collapse, the US won't be able to print as much money as they want. That will create a lot of slow growth around the world. Okay, and the growth will be all dependent on the productivity rather than the money printing. So this is the end of the video, guys, and I hope I try to explain I try to do my best to explain you the implication of the US dollar, and I hope you guys understand the what I've said so far. And and there's other good videos are coming up, interesting videos about macroeconomics I'm planning. So I hope you like this video, and give it a thumbs up, and let me know what other topics related to the macroeconomics you want to know, and you want to talk about, you want to learn about. So I'm going to make the video on that also. So thank you so much for watching, and bye.